Imagine this, you finally got some savings. Not a ton, but enough to make you think, okay, what's next? Should I just let it sit in a bank account, or is there a smarter way? Maybe you've heard whispers of robo-advisors, and one name keeps popping up, StashAway. But then the big question hits you, is it safe? Is it really safe to put your hard-earned money into something you mostly interact with through an app? That's what we're diving into today. Because let's be real, the world of investing can feel like a minefield. Jargon, market fluctuations, and the sheer volume of options can be overwhelming. And when you're dealing with your finances, safety isn't just a nice-to-have, it's essential. So, what exactly is StashAway? In a nutshell, it's a digital wealth management platform, a robo-advisor. They use algorithms to build and manage diversified investment portfolios for you. You tell them your financial goals and risk tolerance, and they handle the rest. This automation is a big part of what makes it appealing. It's supposed to take the guesswork out of investing. But here's where the safety question gets complicated. It's not just about, is StashAway going to disappear with my money? It's about a whole range of factors. First, let's talk about regulation. StashAway is regulated by the Monetary Authority of Singapore, MAS, and other relevant authorities in the regions they operate. This means they have to comply with strict rules and regulations. That's a good start. Next, we need to look at the underlying investments. StashAway invests your money in exchange-traded funds, ETFs, which are essentially baskets of various assets like stocks and bonds. This diversification is a key part of risk management. It means your eggs aren't all in one basket, so if one asset performs poorly, others might offset it. Now, let's address the elephant in the room, market volatility. No investment is completely risk-free. The stock market goes up and down, and your portfolio will reflect that. StashAway, like any investment platform, can't guarantee returns. They can, however, manage risk by adjusting your portfolio based on market conditions and your risk profile. They do this by rebalancing, which is a key process to keep your portfolio aligned with your initial risk tolerance. Another important point to consider is the security of your data. StashAway employs industry-standard security measures to protect your personal and financial information. They use encryption and other security protocols to ensure your data is safe. 1. Blog.mylipulsa.net. Blog.mylipulsa.net. However, it's crucial to understand that even with all these safeguards, you're still investing. And investing always involves risk. Do your research, understand your own risk tolerance, and don't invest money you can't afford to lose. Look at the company's history, read user reviews, and understand the fee structure. Ultimately, whether StashAway is safe depends on your definition of safe. It's regulated, diversified, and uses security measures, but it can't eliminate market risk. It's about understanding the trade-offs and making an informed decision. With that said, thanks for watching, and until next time.